Okay guys, so I'm going to be reviewing the mistake here which I made on spot volatility up index. So probably the mistake which I made here was that I failed to observe that price is actually starting to be extremely bearish. Okay, so this mistake here, it happens to most of us, but just to show you guys a clue, I took my entries over here. Okay, I took my entries for sales at this area over here because I'm expecting a downtrend to continue. But now the only issue that we have right now is that price hasn't broken any significant structure. This was an area of support. Price has to break up underneath this level. Also, price ended up by making a new higher high in the market. So this could be some kind of a shift. Okay, you could see market starting to shift upwards for the upward direction. What I mean by shift is that we could see price actually pushing all the way down up to this area of resistance. Okay, so but I won't bore you with all those details. I'll just go to the H1 and so that I can show you even more potential setups. So on H1, I don't know if you guys can see, but over here, price is selling. Okay, so underneath this level of support, price is gonna be bearish. As simple as that. Price is showing you that underneath this level, I'm selling. It's literally just telling you that, hey, bro, whenever I go underneath this level, I'm selling. There are sellers here who are willing to take price lower to the lowest. Okay, so what happened? Price underneath this level gave you the first indication. What happened after the indication? Price had this massive push to the upside. Now this is just a liquidity grab. It's a normal thing in the markets, so it can grab as much liquidity as it wants. Okay, and then what happened next? Price. So what happened next is that price, after it made this bullish run to the top, we had a break. Okay, now this is where you enter in your positions. You can always enter in your positions here. Stop loss can be above this area, and then you can be aiming for at least to this nearest level, lower low that was made in the markets. Okay, so the same thing happens even here. Let's say you missed this whole move to the downside. Okay, so we have another new area of support. This is where they found buyers in the market. Okay, so that means that once price was able to find buyers in that area, if it goes underneath this area, what do you expect? You expect that there are no buyers left underneath this area. There are no buyers, because if there are buyers in this area, they will be able to push price above. But what I mean is that there are no buyers actually, because price broke through the first time, giving us the indication. Then we have this other small blue candle. Now the issue with the correction move, it doesn't have to be this impulsive big move. No, the corrective move can even be two candles. As you can see here, price pulled back a bit. We just wait for a shift in structure. Price has to be underneath our zone, and then we sell. Simple as that. You don't even have to wait for a big move. No, you just have to be considerate of how you take your entries. The same thing happened here. Price was having a level of support. What happened? It broke through the level of support the first time. So this could have been your entry. Price broke through the level of support the first time, and then after some time, what happened? Price came and made a corrective move. Okay, so after that correction move, what do you expect? After price came back underneath this level the second time, that's when you take your sales. Simple as that. It's the same thing over and over again. Okay, even here we have the same thing. We have a level of support over here. Price came, price was selling, but over here we got some buyers who are able to push price to the top. Now, what happens when price goes underneath this level? There are no buyers left. Why? Because if there are buyers left at this area underneath it, would have a massive push. But what happened? Price failed to hold. Buyers failed to hold price. Okay, that's why we had this break. If buyers were strong enough, this break wouldn't have happened, because as it did before. Buyers were stronger here, so they were able to hold price until we reached this area over there. That means that if price comes back to this same zone, we're expecting that price is able to be held until we reach the next area. But what happened next is that price broke through, giving us the indication that underneath this level there are no buyers. Okay, buyers are losing momentum. So we just wait for price to come underneath this level the second time, and we take this entry. Simple as that. So most of you guys are just complicating your trading charts and with all these crazy indicators, just because you have been brainwashed actually, not even brainwashed into thinking that trading should be so hard. Okay, you've been trained to think that making money should be so hard. That's why subconsciously you don't even accept that trading can be this easy. Otherwise, you say to yourself, if trading was this easy, how would some people make money? I'll tell you for a fact. Now we have another area of support over here. Now the thing about trading ICC is that you can always look to your left and you can always look for confluences. For instance, to your left here we have another small level of support. Underneath that level of support, price was bearish. If you observe, we had some bit of a level of support over here. Price was buying, and then we had another support before you have this massive move to the upside. So that means that anything underneath this level, price is going to be bearish. So if price comes underneath this level, you're going to be bearish. As simple as that. With ICC, we are just repeating patterns. So anyways, price came up underneath. Let me just draw a small line so that you guys can see what I mean. So over here, that's the level I'm talking about. So if you go here, what do you observe? Price came underneath the same zone where we saw there was a support. Therefore, we're expecting the same move to the downside. So price was giving you, in short, so many indications. Okay, it gave you so many indications that you wanted to shift structure. And I won't stop there. I want you guys to understand this, so I'll make as many videos as possible so that by the time this year ends, most of you would have gotten the basic idea behind ICC and why it's one of the best strategies for small and beginning traders. Okay, because most of the other strategies, they are going to just give you a few months of learning, but you won't be profitable in the long run. With the ICC, you're going to be profitable because you're going to be catching big moves in the market. Okay, so just to come back on topic, if you observe, this was another area of support. Price came above this area, we had a push. Why is this an area of support? Because if price was able, there are no buyers at this area, price would simply just drop. Okay, but what happened is that price had faced some bit of resistance here in the form of buyers who made this area of support and then pushed price higher. So once we broke through underneath this level, we had the first indication. That's the first principle you have to master, that whenever price goes underneath a level of support, we have the first indication that there are sellers who are getting in the market. They are getting ready. Okay, so after that indication, we have the corrective phase. The corrective phase is when price just makes a pullback just to grab liquidity out of the markets. This will pull back and go all the way up here. Okay, well, that doesn't matter where it stops, but as our entry is always underneath this area, so the moment price comes underneath this area, that's when you take the entry for sell. So we got this massive sell the first time, but then price ended up pushing upwards. So we have another area of support over here. I don't know if you guys observe, this is another area of support. Anything underneath that level is going to be good for sales. Okay, but not to bore you, price broke through this level of support the first time, giving us the indication. Then we had a massive drop the second time, okay, giving us a new lower low. Now I want you guys to always observe the structure. If you guys are being confused on this small concept, you may find it very difficult to even understand market structure. Because imagine, price was having a bit of resistance, we sold, and then here we have a bit of resistance, we sold. But what happened next is that price came and cleared both levels above. Now, probably most of you guys, once you see this liquidity grab, you fail to notice that price on the long run is always bearish underneath this level. So when most of you guys see this liquidity grab, okay, you'll be like, oh, but price is gonna be bullish. It's okay, price is gonna be bullish, but only above that level. Okay, we have to wait until price comes above that level so that we can confirm the bullish sign. Okay, but if we don't get the bullish sign and price comes underneath our level where we saw massive selling happen before, then you can simply take your entries. We would have taken another entry over here and would have held this trade for some good time. I'm not trying to back test, because most of you guys have been complaining that if someone gives you videos and they are just showing you how it happened, they usually miss out the whole point. I'll be trading live accounts starting very soon actually. But in the meantime, I want you guys to always understand that trading is not meant to be difficult. It's only our minds which are trained that way. You're trained from the first YouTube video you see. The trading is meant to be so difficult because, you know, how would wouldn't anyone be able to make money? But I can show you that trading isn't that complicated. Another area of support over here. So we have I've explained all these first places. So what happened? Price made this massive push to the upside, giving you this level of support because we are selling aggressively before, but then price came and made this huge push downward. Then what happened next? Price, after making this huge push downward, we had a continuation to the upside in the form of a corrective move, And where would our entry be? Our entry is always after price comes underneath this level the second time. Okay, so the second time the price came underneath this level, that's when we would have taken ourselves, and then that's where we could have sold off. Same thing here. So I'm just explaining the same thing that I'm using to trade over and over again, so that you guys can understand. Okay, so over here we had another level of support. Price was selling aggressively, then we had buyers coming into the market pushing the price higher. So you know that you could even have caught this trade over here. We had another level of support over here. So underneath this area, above this area, we had a bit of a support. Price came and pushed all the way up, if you observe, from here all the way up to here. So the first indication was when price broke through this level. So after the pullback, we then went underneath this level the second time. So you could have taken even your entries from here all the way down to here. Okay, but for high probability setups, I usually will have to trade after price comes underneath the first time, and then the second time, and then I take my sells. So there's something is happening here. We have the indication price came underneath this level the first time, giving us the craziest indication that wants to sell. But then what happened after some time? Price came underneath this level the second time. Okay, so I'm expecting the same thing to happen. As simple as that. Yeah.